Good afternoon, everyone, and welcome to Stock Market Today. It's Ali, Coram, and Ken Shreve here with a breakdown of the action in today's session, Thursday, August 10th, where it was a little disappointing, but not all too surprising to see the major indexes fade the way they did, Ken.
Yeah, I mean, we started off very, very strong. Nasdaq up 1.6% during the first half hour of trading, and then pretty much after that first half hour, sellers were in control. But we've seen some damage done to the market in recent days. So, like you said, maybe not all that surprising. Three stocks to watch today include Technip FMC, kind of a funny name. Ticker is FTI, provider of equipment to the oil and gas industry. Also take a look at Lululemon. Talked a lot about these retailers showing strength, even though the tape is starting to weaken a little bit. So LULU is worth a look. And finally, Martin Marietta, which we have in the Leaderboard model portfolio. MLM is the symbol there.
All right, we'll get to those stocks, but first let's take a look at the major indexes. The Nasdaq today up just 0.1%. The S&P 500 barely in the green, and the Dow up a little over 0.1%. The Russell 2000 down 0.5% today. And what do you know, it can the Nasdaq coming right up to its 21-day line and getting rejected there. We didn't suffer too much damage below the 50-day line. We're still hanging right in there, but are we hanging by a thread?
Hanging by a thread, I think, is a good way of putting it. Yeah, on IBD Live this morning, we were in when the Nasdaq was up 1.6%. We're saying, well, it's not out of the woods yet. We still have 14,000 to reclaim, and you can see those short-term moving averages there, the 10-day and the 21-day. So those are going to be some resistance. They were today. So we're still in a confirmed uptrend. Clearly, the uptrend is under some pressure, and the Nasdaq is trying to make a stand at its 50-day moving average, but after today, certainly not a convincing stand at all. But we've seen a lot of damage done to leading stocks, leading growth stocks in the market over the past couple of weeks. We had a very high distribution day count for the Nasdaq, 7 headed into today. Looks like we avoided one today because volume looks like it's going to be a little bit lower than what we saw on Wednesday, but not a great session at all for the bulls. If you're short the market, you probably liked today's action.
All right. And in terms of what to do from here, what sort of scenarios are you playing out?
I wanted to mention, we have Dan Fitzpatrick from Stock Market Mentor on IBD Live, and I always remember what he says is if you're looking for stocks to buy and you just can't find any, don't force the issue. It's okay to sit on the sidelines. And in recent days, the crop of actionable technical setups, I mean, it's been getting smaller and smaller and smaller. We've had a lot of tech leaders violating their 50-day moving averages. So just not that many stocks working at this point. Still seeing some outperformance in the retail sector. Still seeing some oil and gas names holding up okay. But by and large, the breadth picture has really deteriorated. So it's really a time to be playing defense. And we've added a name here and there to the Leaderboard model portfolio, but definitely playing defense. It's really tough when you get institutional selling start to crop up in the market. It's a tough tide to swim against.
Right. I mean, if you're in a stock and you're seeing those sell signals get triggered, you need to take action. What about though for stocks, like for example, in the Leaderboard portfolio where we have really big gains? If we are perhaps in the early stages of a bull market, just a couple months into something that could be much bigger. I'm not saying it will be. What's the approach for trying to hold on to those winning positions?
Well, we've got quite a few of them on Leaderboard right now. Nvidia is a stock that's been on the leaders list since November. So while you've seen a lot of leaders, plunging below their 50-day lines, Nvidia, it hasn't really been a decisive break yet. So I think the stock market bulls are still hanging their hat on Nvidia here. It hasn't been an utter breakdown like we've seen in some other the Magnificent Seven stocks, for example, Microsoft below its 50-day moving average, and there are lots of others too. So Apple, these stocks look like they're just ready to form new bases, and it'll probably be a little while before we see new entries. But with some of our big gainers in the leaderboard portfolio, again, we're watching for. We really haven't seen any major sell signals yet, so we're still holding on to 11 names. We've given back some gains, but still, because they're not violating support levels, we're kind of holding with a conservative exposure at this point, maybe about 70%, 30% cash. But just keeping an eye out for sell signals, keeping an eye out for real heavy volume, harsh down days. Like we've been seeing on the Nasdaq. But 11 names right now that were profitable on most of them, but still keeping a close eye on them.
Mm-hmm. Yeah, and I think Nvidia, the entry, was it on the earnings move in February?
Yeah, exactly.
Yeah.
We bought the gap up, and turned out to be a good entry. So when you have a profit cushion like this, you can normally wait and wait for a stock to go through a normal base building process. Nvidia is going to be coming out with earnings in a couple of weeks, but listen, there's a lot of good news that's been priced into this stock. So could Nvidia sell the news on earnings? Absolutely. But I think if it does pull back and form a new base, we should see a fairly mild pullback on the left side.
Mm-hmm. Okay, next on our list, let's quickly take a look at the other major indexes. Here's the S&P 500 reversing lower, well, not lower, but reversing well off of its highs, hitting resistance at those shorter term moving averages and 4,500. It could soon have its own test of the 50-day line. And here's a look at the Dow. Was looking pretty strong as well intraday, trying to bounce off of its 21-day line, still holding above that level. Where it hit resistance was more at those recent highs. And
Just a
then
quick
go
point
ahead.
on the Dow. Yeah, Dow and the S&P 500. We did see higher volume on the New York Stock Exchange today. So when you see this type of price action in the Dow and the S&P 500, where you see a big intraday gain fade all the way back to almost break even, slightly higher in higher volume, we call that stalling, and it's really a subtle form of institutional selling. I mean, the Dow eked out a small gain today, but you can see heavy volume. It gave back all those gains, so there were definitely sellers in this index, knocking it near its low. So it's a subtle form of distribution, but again, we've been in a market that's been showing signs of distribution for for several weeks now. So we just have to let the institutional selling kind of run its course here.
Exactly. Yeah. Another warning sign to be aware of. And we can also briefly check in on the Russell 2000 0 RUS in MarketSmith. This looks like a pretty ugly reversal here, Ken.
Yeah, this would definitely qualify as an outside day, because you can see the high and low from today sort of engulfed the high and low from the prior session. So this is what we would call a bearish outside day. But look at that 50-day moving average kind of sitting right at that round number of 1900. So maybe a little more weakness in the Russell, but we'll see what that test of the 50-day looks like if it gets down that far.
And triple Q, tracking the Nasdaq 100, looks pretty similar to the composite here, Ken, but mega cap tech stocks, could this be time where they really need more of a rest?
Yeah, I wanted to look at the QQQ, because you can look over the past 2 or 3 weeks and look at all those higher volume declines in the QQQ. Okay, that's how we kind of decipher distribution in the market. Now look at the volume in QQQ today. It was well above average. The Qs closed with a very modest gain, just like the Dow, but it closed all the way near its low. So this is again another sign of stalling action, which you tend to see when a market is showing signs of distribution. So heavy volume in the QQQ, but a very weak close.
And IYT, another ETF you wanted to check in on, Ken, transportation stocks.
Yeah, seeing a lot of transportation stocks still fighting a good fight. A lot of trucking stocks still acting well here. I want to just look at the weekly chart here because I think it's it's a little too early to give up on the uptrend yet, especially when you see the IYT transportation stocks. I mean, a nice rally, several weekly gains, and looking like it's ready for a test of that red line there, the 10-week moving average. So if this market uptrend is going to hold itself together, I'd expect this IYT to find support there. So a key test coming up for IYT as well.
All right, now let's take a look at FTI on our list of interest, oil and gas machinery. And this group is number 36 out of 197, a gain of 1% today. Light volume, but a really nice uptrend here for this stock, Ken.
Yeah, really nice uptrend here. Technip is a French company, a French oil and gas equipment provider. They merged with FMC Technology, so that's how you get this name, Technip FMC. I wanted to look at the weekly chart here because it really is showing the type of trading that we want to see after a breakout. First of all, you see several above average volume weekly gains over the past several weeks. That's a positive, and then just that tight trading near highs. This is a stock that looks to me like it's still under some accumulation here, holding gains up near highs. So if it continues to move, sideways without giving up much ground and holding that 10-week line, we'll probably see a good healthy base form here, and could see more upside in this name.
Let's now take a look at Lululemon, which has been a little all over the place. I'm not going to lie, Ken. In 2023, we had this huge, impressive gap up on earnings. Then it gave it all back and then some, almost filled the gap. Then the next earnings report, it was another gap up, but a weak close. Now, has it finally gotten over the volatility and calmed down enough for us to seriously consider this one again?
Well,
Perhaps,
I thought
perhaps.
so, and then I see the price action today, which looked a lot like the broad market. So it really made a nice move. Volume, was heavy early, but never really came into the stock. So you can see Lulu got pulled down with the looks just like what the major stock indexes. But I'm a real fan of Calvin McDonald. He's a great CEO. This is a company that really has very few blemishes when you look at recent earnings and sales, 20% plus growth for several quarters in a row. It's still got good growth prospects. Their same store sales, it seems like every quarter, up 20 plus percent. So really good execution here. We know they've got a very loyal customer base, but retailers are still outperforming here. And for those that are still optimistic about this uptrend, we want to be watching the retail stocks. Several are holding near highs, and I think Lululemon is still a strong name in retail. We'll see if it can eventually move out of this consolidation here.
Yeah, I mean, if you draw a line around 400 and go all the way back, you can just see what a critical level this has been for resistance in the past as well as support. So a lot of trading happening around that area. And in terms of, is this stock tightening up? Well, we are seeing a 4 weeks tight taking shape. So it seems like it has calmed down, Ken,
It
in
has.
lighter volume. So if we can really see it blast above 400, that potentially could be pretty bullish.
Absolutely, and again, this is a fundamental leader. You've got that composite rating of 96. You got very high return on equity of 44%. So there's just a lot of good fundamental metrics here, and company has proven quarter after quarter it's executing quite well. So we'll see. I mean, there's a lot of funds in this stock already, more than 2,000 funds in this stock as of the second quarter. So it's not like it's a new emerging growth story, but the fundamentals are still very solid here, and they're seeing a lot of traction in their men's business. People, so they've just really branched out, generating revenue in a lot of different areas, and still like the prospects for this stock.
Last on our list, let's take a look at MLM. I know it's one that you have brought up on the show previously, and for good reason. A nice support day at the 50-day line after that earnings report, reversing to close positive. Seems like this 462, 463 level is the next area of interest to the upside.
Yeah, here was a stock that was up, 1.6% today, so pretty impressive. And there was a little bit of volume behind the move today, and that comes after some recent above average volume gains. So the weekly chart has a good look to it. This is a relatively new name in the leaderboard model portfolio. Made a really solid stand at its 10-week moving average last week. It was a good first test. Now you just basically have what looks to be what looks like a flat base forming, trading tightly right at that 10-week moving average. Martin Marietta is sort of an ancillary building play. They make aggregates like crushed stone, sand, gravel for commercial and residential construction. So good tight trading near the 10-week line. A really solid support week last week. Another stock that's fighting a good fight in this market.
Great. Well, thanks, Ken, for that look at these stocks and the market. And thanks, everyone, for tuning in. We will be back with more tomorrow morning on IEBD Live, and we hope you join us. Investors.com/IEBD Live for all the details on that. And since it's Friday, we've got another special guest for you. Returning to the show is Evan Medeiros of The Trade Risk. So looking forward to seeing stocks on his radar and what his outlook is for the current market. We'll see you then, and we'll also see you right back here tomorrow at the close.